Hey everyone, Claudia Ragona here with the Ragona Sisters Real Estate Team. Today we're going to tackle a major issue affecting thousands of homeowners across Ontario. Mortgage delinquency rates have jumped 50%. That's a huge warning sign that many people are struggling to make their payments. If you're feeling the squeeze, know that you're not alone. We've worked with real clients facing the same challenge. And the key takeaway is this: being proactive is always better than being reactive. When financial stress builds up, it's so easy to make rash decisions that you might regret later. So in today's video, I want to cover why mortgage delinquency rates are rising so fast and the shocking statistics about how close most Canadians are to financial trouble, and also share some real client stories about homeowners struggling with their mortgage. And finally, we'll go over the steps that you can take now to protect yourself before it's too late. And if you or someone you know is struggling to keep up with mortgage payments, please comment below. Let us open up this conversation because you're not alone. Let's get into this as to why this is happening, why so many more people are falling behind on their mortgage payments. First and foremost is rising interest rates. Over the last few years, many homeowners enjoyed historically low interest rates. Some were paying 1.5% to 2% on their mortgage. But now, many are renewing at that 5% or even higher rate. And what this means is for a typical $500,000 mortgage, well, your monthly payments could increase by $1,000 or more. And the cost of living is higher than it ever was before, whether it be groceries, gas, utilities, everything is more expensive. It's ridiculous. Canada's inflation rate hit a 2% in October of 2024, making it harder for families to stretch their incomes. Now, wage growth isn't keeping up either. The cost of living keeps rising, but income hasn't grown at the same pace. Many people are dipping into their savings or credit cards just to get by. Sound familiar? Job losses and financial uncertainty is everywhere. Canada's unemployment rate recently hit a 6.5%. It hit 6.5%, meaning more people are losing their jobs or facing pay cuts. This combination has pushed thousands of homeowners to the edge, with many missing payments for the first time in their lives. And you know what the shocking statistic is? Half of Canadians are just $200 away from being unable to pay their bills. Think about that. That means one unexpected expense, a car repair, a medical bill, an increase in your mortgage payments, can literally push someone into financial hardship immediately. But it gets worse. Over 11,000 mortgages in Ontario have missed payments in the final quarter of 2024. That's 3 times as many as 2022. Canada's total consumer debt has now reached $2.56 trillion. That's a 4.6% increase from last year. So let me know in the comments, do these rising costs worry you? Have you or someone you know felt the impact? Let's talk about it. But I want to share a real story of a client we worked with recently. For privacy reasons, we'll call them the Thompsons. The Thompsons bought their home 5 years ago with a 2% fixed mortgage. Their mortgage renewal came up and their new rate jumped to 5%. That increased their payments by $1,500. They tried to adjust, but just after 6 months, their savings were gone and they missed their first mortgage payment. At that point, they panicked. Of course they would panic. They started using credit cards to cover the shortfall. And I'm sure you've seen that before, or you're probably in that situation. But the truth is, if they've reached out sooner, they could have had more options, whether it be refinancing, negotiating with the lender, or even selling before it became an emergency. But because they waited, their choices were limited, and they ended up having to sell under pressure, which meant they lost equity they could have had protected. So what can you do to avoid falling into the same situation? Well, here are some practical steps you can take right now. First off, review your mortgage terms early. If your mortgage is up for renewal in the next 6 to 12 months, you need to start preparing now. Next, talk to your lender before you miss a payment, if that becomes a situation, because many banks have hardship programs that can help. But you first need to talk to them before you actually go into default. Next, explore refinancing options. Extending your amortization period can reduce your payments and give you a bit of breathing room. Next, which is obvious, is to cut unnecessary expenses. Cancel unused subscriptions, cook at home, reduce discretionary spending. Next is to consult a mortgage broker or a financial advisor. Mortgage brokers can help you find better rates or alternative lenders. Remember, the key is to be proactive, not reactive. If you take action early, you give yourself options. So the issue doesn't just affect individual homeowners. This has a huge ripple effect across the entire economy. What does that mean? Well, more foreclosures could lead to a drop in home values affecting all homeowners. Well, we have power sales in Canada. That also means tighter lending requirements could make it harder to qualify for a mortgage in the future. Also, local economies suffer when homeowners cut back on spending. So this is why it's so important to tackle this issue head on before it gets worse. So what does this all mean for you? It means now is the time to act. So drop a comment below and let's talk. Are you feeling the impact of higher mortgage rates? Do you know someone who is struggling? What strategies have helped you stay on top of payments? And if you're concerned about your mortgage, please don't wait until it's too late. Reach out to us today or your mortgage broker or your real estate agent. I'm sure they'll be able to help you to explore your options before things spiral out of control. Again, if you found this helpful, please hit the like button, subscribe to the channel to support us, and share this with someone who needs it. And if you don't need to go through this alone. Please, let's work together to find solutions. There's always a solution out there. Again, I sound like a broken record, but remember to be proactive and not reactive. We'll see you in the next video.